Item 10F, receive first quarter financial update report as of September 30th, 2012, and adopt a resolution amending the fiscal year 2012-13 operating budget to reappropriate 2011-12 carryover encumbrances. Kim, you're on.
Time to talk numbers and purchase orders, so hopefully everyone's had their caffeine this evening. Honorable Mayor, members of the City Council, the purpose of my presentation tonight is twofold. The first is to provide the first quarter financial update report for the 2012-13 fiscal year, and the second is to describe the action that is being requested of the Council this evening as presented in the resolution before you. I will begin by going into the first quarter financial update report. Starting with the general fund. Due to the timing of the receipt of many of the city's revenues, the first quarter revenues are expected and have historically proven to be around the 14% benchmark in total at the end of the first quarter. This is primarily due to the receipt of many of the major city revenues, including property tax and vehicle license fees, coming in installments, beginning with the December installment and then later in April. In addition, many of the major taxes, such as sales tax and transient occupancy tax, tend to lag a month, and so we have only received, as of September 30th, 2 months rather than 3 months of some of those revenues. So therefore, we're not near the 25% mark, and actually the 16% mark that we see at the bottom line is slightly above the historical 14% that I mentioned. Some notable items in the general fund revenues that we've noticed as of the first quarter. One thing you might notice is sales tax dollar-wise compared to last year's first quarter results is actually down. That is not a result, it's not an indicator that sales tax in general is down. It's really just the result of a timing difference in the receipt of payments. So we received one extra payment last year that we did not receive this year. All indications are that sales tax is where we targeted and where we budgeted at, so there's nothing to be concerned about with that number. You'll see that the charges for services and use of money and property, the dollar amounts year to date, are less than what we received last year. These two categories were affected by the loss of redevelopment. The charges for services was a category where we used to have money coming in from the redevelopment agency to recover cost of general administration costs spent working on redevelopment. So the budgets were reduced accordingly, and same with use of money and property. We historically received an interest payment on the outstanding city advances in this category, which has been put on hold or reduced at this point in time. So that's the explanation for the decline in those two categories. Finally, a positive note, the hotel motel occupancy tax, the TOT, if you'll look, this number only reflects 2 months of the fiscal year, the 455, and it is actually 20% above the number for the first 2 months of last year. So last year, TOT was performed very well, and it appears that it's not only just continuing to perform well, but actually increasing this year. Moving on to the expenditures, as you would anticipate, the first quarter expenditures tend to run around the 25% mark. At the bottom line for the general fund, expenditures are at the 23% of budget mark, which is the same as where they were last year. And as you look at all the departments, they all tend to be in the 25% range with the exception of recreation, and that's the result of the fact that much of recreation's part-time budgeted salaries are spent at the beginning of the year during the busy summer season, so we tend to see higher percentages in that department during the first quarter. However, all other budgets indicate that the departments are working well within their budgets. Moving on to the enterprise funds, starting with the revenue, the water revenue is at 29% of budget, and I'd just like to point out that this number includes 1 month of the rate increase that was approved by City Council for 2012, so that rate increase went into effect in September, so this does reflect 1 month. Same with wastewater as well, that does reflect the 1 month. Going back to water for just a moment, the revenues tend to be slightly higher than 25% during the first quarter, given that it covers summer months where water use tends to be higher, and then it drops off during the winter months and sort of catches up to normal. On the cable side, cable revenues are at 24% of budget, so trending well for the year. However, total revenues in cable are 6% below the number that we had received as of the first quarter last year. And finally, on stormwater, not much to discuss on the revenue side. Stormwater fees are collected on the property tax bill, so we will anticipate receiving the first installment in December. And really nothing notable on the expenditure side. All the expenditures in the enterprise fund departments are below the 25% mark and well within their budgets. Moving on to internal service funds, these are the departments that exist to serve other city departments, and they are funded entirely through allocations from other city funds. So that's why it looks very nice and consistent that 25% of the revenues have been achieved in all these departments, because they are simply transfers from other funds in accordance with the budget. On the expenditure side, we have seen that most departments are within the 25% range. However, the very notable variation that you'll see is in the self-insurance fund, and that is the result of the unanticipated increase of the city's liability insurance premium for the 2012-13 fiscal year. Actually increased by more than 33%, and that is reflected in that figure. This concludes the first portion of the presentation on the financial update. I'd be happy to answer any questions on this before moving on.
Any idea what the cost is of that 33% increase in liability?
It amounted to about $130,000 increase.
I mean, the reason for it.
Well, it was primarily, I don't know if you want to address this, Mark, but it was driven primarily by claims in the enterprise funds, but I'll let Mark explain.
Right. We look at those things fairly carefully, and almost all of that increase was a result of the claims that we sustained as a result of water and wastewater overflows as a result of our aging infrastructure. That was the bulk of it. We did just confirm earlier today that none of the increase was due to any activities arising out of the Glenview incident. So none of those things affected any of our insurance premiums.
Okay, thank you.
So moving on to the second portion of tonight's presentation is purchase orders. The city uses purchase orders to earmark or encumber budgeted funds for the purchase of major equipment or significant dollar amount, contractual agreements of significant dollar amounts in the budget. Oftentimes, these major purchases or agreements will span the course of more than one fiscal year. And since operating budgets do not carry forward, the funds don't carry forward from one year to the next on their own, we use purchase orders to encumber and earmark those funds from a previous budget and carry them forward to the next fiscal year to ensure that the funds are available to complete the purchase or complete a project as planned. At the end of the 11-12 fiscal year, a total of $942,000 of outstanding purchase orders remained in the operating budget, with nearly 50% of this amount as a result of one single purchase order, which is the outstanding purchase of the Vector that at the end of the fiscal year. The individual purchase orders were listed and described in the attachment to the resolution and are summarized by fund and dollar amount in this slide. And with that, I'd be happy to answer any questions about the purchase orders. That concludes my presentation.
Good. Any questions for Kim? Any action by the council?
I'll introduce the resolution.
Vice Mayor Ibarra.
Aye.
Councilmember Medina.
Aye.
Councilmember Salazar.
Aye.
Councilmember O'Connell.
Aye.
Mayor Ruane.
Aye.